All right, we are recording. It is June. It is Tuesday, my office hours, and our exam is tomorrow for chapters 4, 5, and appendix 5A. I'm going to share my screen here and have, and also if you guys have any questions about the project or the calendar and project 2 questions. So our exam is Wednesday, same place as last time, and it'll be 100 minutes, and it'll start promptly at 1:30. So I want to make sure, well, probably 1:35, but I have another meeting I have to get to that starts at 3, so I'm just going to be real punctual. And then you guys have a lot, and I mean a lot of adjusting entries this time. And so I'm kind of looking here and thinking I want to go over the accounts with you real briefly, because Victoria just asked, how do you keep the debits and credits straight? And I'll tell you, it's something you guys will be working on this whole quarter, but this is the test where you want to try and get it right. So you have 7 adjusting journal entries to study. You have 4 closing journal entries to study. Can you see my screen, guys, where it says chapter 4, 5 exam?
Yes.
Oh, perfect. Thank you. You have 7 perpetual journal entries, 7 periodic journal entries, and therefore now we're in chapter 5, and that is when you buy merchandise, the company buys merchandise, and they have to suddenly account for it by increasing the inventory account. And then we add cost of goods sold. And perpetual, we track inventory perpetually, and periodic, we only track it at the end of the month. We calculate what cost of goods sold is. Then we have the multi-step income statement, perpetual. And then when you do that statement, it just says cost of goods sold and the dollar amount. But for periodic, we have to do a full calculation. And then just trend analysis, that sort of thing. Okay. So I'm going to put something here. Let's see, I want a blank screen. That's what I want. Okay. I'm going to see if I can stop share for a minute. And let's see if I can do a whiteboard. New whiteboard. Okay. Can you see my whiteboard? I don't know if I can write on it. Oh, it's not writing on here. Maybe on this screen. So work with this screen. Come on. Nope, I do not have a whiteboard. Never mind. The pen. Okay, here we go. Let's just try it. So we have assets equals liabilities plus stockholders' equity. And then I like the expanded accounting equation, so I do revenue minus expense. Can you guys see my whiteboard?
Yes.
Okay, minus dividends. And like I said, you guys are going to be spending so much of your time, and have been, learning new accounts, understanding the flow of business, and mostly, seeing what you guys did on Monopoly. You did a great job, but we still need to really understand what goes up, what goes down, what do we do here, all of that. So here we go. So assets, the most common asset is cash. And for these 3 chapters, we will use cash, not as much, but we will use it. And when we increase cash, is that a debit or a credit? Increase cash. So let's say I make a sale for cash. What do I debit? What do I credit? Or, and then another account that's very common asset is accounts receivable. So what account? Lika, can you write on my whiteboard, Lika? You go up here. Oh, you can.
Yeah, I can see it.
Go up here and see if you can tell me, is it debit or credit to increase cash? So write it on top of the A.
David.
Yes, it is. So can you write debit on top of the A? Good. Did not let you?
Wait,
No, that's nice. Okay.
sorry.
I don't know why this thing is sort of blocked. Okay, so anytime we increase cash, we debit it. So if I make a sale for cash, I'm gonna have that account sales. Right? If I've just debited cash, what do I do for sales? What's my journal entry? Debit or credit?
Credit.
Great, so put that over sales like that. I think it's Lika, right?
Yeah. Do I put the bottom of the cell or like on top of
On
it?
top of revenue, right here. So it's really, really important. I don't know what that. It's really important that you know that you increase assets with a debit and you increase revenues with credit. Okay. So assets are on the left side. Liabilities, stockholders, equity, revenue are on the right side. Credit hasn't operated. So liabilities are increased with a credit because they're on the right side of the equation. Stockholders' equity, same thing. They're on the right side of the equation. And as Lika has already, has already shown us, revenue accounts are increased with a credit. And we have this minus here, that reverses it. So expenses and dividends are increased with debits. I just want you to be mindful of this as we look at these transactions. We're not going to use dividends this chapter, but it'll come back in the final. All right, so there we are. We have new accounts this chapter. We have inventory. And we haven't really used inventory until chapter 5 because we've been only selling service. We have a new expense account this chapter called cost of goods sold. We've been using accounts payable before, so we're going to keep using accounts payable. And we have contra sales accounts, have sales returns and allowances when the customer sends stuff back. And we have sales accounts. Now, these are called contra accounts because they have to increase them with a debit. And that should make sense to you. Revenue goes up with a credit, but then when we have returns, then it's the opposite. This is cost of goods sold. It doesn't look really nice. So let's look at some of these transactions in chapter 4 real quick. We're doing a lot of accrual transactions. Just kind of wanted to walk through those transactions, guys, and relate them to this. Really relate them to this accounting equation because I think it is a little tricky. So what I want you to do is remember the journal entry and recognize it as you approach this exam. So let's quickly review the 7 journal entries in chapter 4. And I want to say, I think the book does a nice summary of that too. Pull that up. I have my PowerPoint, but I kind of want you to look at chapter 4. So let me share my screen. Oh, still waiting. Right now, can you see your textbook? I'm right now in the textbook. And I'm clicking on chapters and I want to go to the end of chapter. Unknown color. I want to go to review and practice. See if we can. Okay.
Professor, I have a question for the exam.
Go ahead.
So on the exam, are you giving the chart of account name
I am not.
or you don't give it, so we have to remember it?
You have to remember your account. Yeah,
Okay, thank you.
you bet. Okay. I want to find a summary of these adjustments. These sorts. Right, here we go. Illustration 424. See them in my screen? Are you able to see it says supplies expense 50? Yes, no?
Yes, I see it.
Okay, so 1, 2, 3, 4, 5, 6, 7. So they look super easy, but it takes some work to get them done. So what I want you to remember is that accounting equation. Okay? And I want you to remember how it works. So here. Another file real quick. All right. So we have an entry for supplies. You have to figure out the dollar amount. But this is the journal. So with your strategy when you take this exam is know the journal entry, you get half credit, and then work on the dollar amount. Okay? So if we're recognizing a supply expense, we're saying, yes, this is how much supplies up. We're increasing the expenses by 1,500. So then we go over to our accounting equation. That, and I have this in my PowerPoint. Can you see this rules of debit and credit? Yes, no?
Yeah, I see it.
Thank you. Okay. So that was what we were just doing on the whiteboard. Assets plus liabilities plus stockholders' equity plus revenue minus expense minus dividend. Normal balance for asset debit. Normal balance for expense debit and dividend debit. Okay. And then these guys are on the right side of the equation and they're positive. So they're all credit, credit, credit. The reason these are also on the right and they're debit is because you have that minus sign, which is the opposite. So if supplies expense goes up, it's an expense to be debited. If supplies, which is an asset that's we haven't used, it's like the supplies that are in the closet, storeroom, that's an asset. Supplies, if we debit to increase, credit to decrease. So you can see it happen. Debit supplies expense, expenses go up, debit, credit supplies is an asset, it goes down with a credit. And here you have it again, insurance expense, prepaid insurance, and over here, insurance expense, debit to increase our expenses. And I don't have the prepaids listed under assets here on this slide, but they would go under assets. We reduce it. And then we have depreciation expense, increase for the debit, and that new account accumulated depreciation. And then unearned service revenue is a liability. So unearned revenue or unearned service revenue, we increase with a credit, but when we recognize the revenue, we decrease it with expense, interest payable, and so forth. Okay. So I would encourage you guys to have that rules of debit and credit when you're drilling on the debit and credit there. For this chapter, we also have the 4 closing journal entries, and they're summarized in your textbook nicely right here under Exhibit 4.32. And here's us closing sales. And this is a little tricky because you're doing the opposite of what you normally do for debit and credit. So we look at our account balances and we say, what do we do with these? We can look at the journal entry for we look at our T accounts and we say we want to make them go to zero. So a T account that normally has a debit balance, we're going to credit. All right. So we're closing out service revenue. Here we're closing out the expenses. Here we're closing out income summary. And here we're closing out dividends. Those are your 11 journal entries here. No statements in chapter 4. And then in chapter 5, there's a wonderful table. Oops, super helpful. And it's actually in the appendix 5A. And this shows journal. This is a little busy. I'm sorry. Yours won't look like this. Here are the perpetual in blue, and here are the periodic, and they're highlighting the new accounts in red here. Okay. These are all purchase transactions. If you're doing perpetual, debit inventory, credit accounts payable. Sure, I have the right page here. Let's go here. At the back of this chapter, here we go. Now I'm showing it to you. This is exhibit. Hold on. Reach down for me. So this is at the back of Appendix 5A, comparison of entries, perpetual and periodic. Okay. So we have the purchase transaction, paying the freight, a purchase return, and payment on account. These are the journal entries for perpetual. These are the journal entries for periodic. Then we have the sales transaction, sale, the return, and then the final payment. These are the journal entries for perpetual, and these are the for periodic. So lots of journal entries. I know it's a lot, but this is the point in the quarter where you have time to make sure you understand debits and credits. The rest of this course, accounting 202, you will be doing more journal entries. You always have to be ready for journal. Any questions about that so far? Let me open up. I want to talk briefly about statements. So that's going to be in chapter 5. So we have the multi-step income statement in chapter 5. So just like with balance sheet, in chapter 1, we did a simple balance sheet, simple income statement, retained earnings statement. But then in chapter 2, we went to classified balance sheet. So what I want you to know is that we can't use the simple statement anymore. We have to use the multi-step income statement. That's what you're going to see on your project as well. Okay, so let's divide this up a little bit. Okay, can you guys see Jennifer's office supply here? Yes. Thanks. Okay, so this is the multi-step, and it's going to be done with perpetual. Okay, so you can see we now have 3 sales accounts. Sales, and then we subtract these guys. 250 minus 13 equals 237. Did you have a question? Okay. Then we do cost of goods sold, and then we calculate gross margin. So it's real important we understand what gross margin is. So gross margin is net sales minus cost of goods sold. So 237 minus 142, 200 equals 94,800. We actually use this a lot, gross margin. We use it and we calculate the percent. So we say 94,800 divided by 237,000, 40%. Okay, that store has a 40% gross margin. But we're not done with the statement. We keep going. So here's sales, cost of goods sold. Then we list all the operating expenses. So pay attention to what are the operating expenses: salaries, utilities, advertising, depreciation, and freight out. Okay? Be mindful of that. Insurance. What is not here are what is called other revenue and other expenses. And they're the unusual items. So we don't consider them part of normal operations, but we add up all the operating expenses, and then we subtract 94,800 minus 74,522 equals income from operations. And we talk a lot about the importance of operating income. So here we go, and we're moving forward. I compress the operating expenses here. Do not do that on the exam. I want you to list each account separately. This is just to get it onto one page. Okay? But I want to show you the other revenues and the other expenses. So anything with interest goes below operating income. Income from operation goes below, goes down here. It's other. Interest revenue, interest expense. Remember, companies do three things. They do operations, investing, and financing. This is operations up here, and then down here is how we finance it with interest. Other things that go down here are anything that says gain or a loss. It means it's out of the ordinary. So if it's a gain, it's added. If it's a loss, it's subtracted. So add up all the revenue, add up all the other expenses and losses, and we have a net revenue of $700. So we will be adding that 20278 plus 700. And then we'll calculate income taxes. I think it's like 25%. So that's the multi-step income statement. Any questions about that one? So finally, with Appendix 5A, we want to make sure that we understand how to calculate cost of goods sold for periodic. Okay. So there's really 5 items here. 1, purchases. And then in beginning inventory, 1, I'll use my thumb, beginning inventory plus purchases minus purchase returns and allowances minus purchase discount. Add freight in, and then we come down here, add those 5 items together. I don't care about the subtotals. And then you say goods available for sale. 154,050. Okay. Then we subtract our ending inventory and we say, we know what we have left over at the end of the month. This must be what we sold, 142,000. So be able to calculate that as well. Okay. All right, so let's go back to your textbook, and I'm trying to remember. I want to make sure that we get all the, make sure you know how to calculate gross profit rate as a percent. Remember, there's other ratios you need to know for this chapter. We're not going to use quality of earnings for this chapter, but we are going to use gross margin. And profit margin is the net income divided by net sales. So one of them is that subtotal, gross margin divided by net sales. Profit margin is net income divided by net sales. Okay, to be able to calculate them. Do you guys have any more questions or anything else you want to go over?
Oh, sorry.
Go ahead. Go ahead, Victoria.
Just in general, like, is there, like, on the actual exam, is there anything that was not on the practice exam, like something we should review outside of it, or pretty much everything?
So what I say to students, because that question often comes up, is the practice exam is just the practice exam. So you want to make sure that, hold on, let me hold this.
Okay, I didn't hear anything.
So what you want to make sure is that you're comfortable with all the homework problems that I assigned. And you can go back in your textbook and review them. And you can also review them on the Wiley Plus, the homework software. I think this test is pretty straightforward. There is an essay question on the practice exam, and it relates to earnings per share and gross margin percent. I think it's pretty good. I mean, usually students say, oh, it's in a different format, so it's a different question. So I would say you're for sure going to pass if you're familiar and comfortable with the practice exam. I think it's good to study the PowerPoints and the examples that are given there and make sure you understand them. I also think it's a really good idea to go back over your homework, and don't forget the account identification quizzes as well.
Okay.
I try not to trick you guys, I really do, but I think sometimes it's just for students, it's you're just not used to different formats. So like if it's not A plus B equals C, if it's C minus B is A, sometimes students don't like all that moving numbers around. They want it real formulaic, but tests aren't usually that way. So the big challenge is making sure you get the right journal entry and then calculating the right number.
Okay.
I have a question.
Sure.
Can we know about like how many questions are there, like how many page on the exam?
Oh, that's sure you can. 11 pages on the exam. One, two, three, four, five, six, 7 questions.
So those 7 questions is include like everything on the practice exam, right?
Some
Like
of them are
the example.
some of them are similar to the practice exam. Yeah,
Okay, thank you.
you got.